Hello, dames, and everyone out there in the world of social media. I'm excited to be here today with Marla, the CEO and founder of Raincatcher. And today we are going to be talking about value builders, specifically why you should focus on value drivers while you're building your company. And specifically, the four drivers that we're going to talk about today are growth potential, monopoly control, financial performance, and recurring revenue. So as business owners, you're likely proud of the results that you've achieved at this point. Otherwise, you really wouldn't be doing what you're doing, right? You would have stopped being a business owner by this point. But when it comes to really building the value of your business, your future is actually critical. That's why your growth potential is one of 8 factors that drive the value of your business. So as Raincatcher deals with this on a daily basis, helping entrepreneurs buy and sell exceptional businesses, Marla, why don't you get us started by telling us about the concept of the buyer's lens?
Sure. So we talk a lot when we're discussing the 8 drivers about it building, a valuable, sellable company, which is very important. But one of the things we don't always talk about is those drivers are also the factors of why a buyer would discount a business. So going backwards in my career, I was in mergers and acquisitions on the buying side for, I guess it was about 8 years. And my role was we had a 500 million portfolio, and my role was to fly out to that business owner's business, meet with the personnel, get to know their operations, look at their financials. First off, I was trying to figure out, do they meet the criteria that we would want to bring them into our fold for the conglomerate group we were creating? And the first thing I always looked at was financial performance, always. Didn't go any further till I looked at that. And then the second thing I would look at is the growth potential. Where can a company go? How far can they grow from here? Are they stagnant? Do they have a process or do they have products and services that can expand into other markets? And then the third thing I would always look at is their operations or people, and wanting to look at, what is the potential to be able to expand customer base? Do they have the current team to be able to do that? So I give that information because this is something I've lived and breathed. That when I actually, Megan, I don't know if you know this, but I didn't know anything about Value Builder back then. I talk about that sometimes. I wish I did.
Right.
It would have saved me a lot of headache. I would have had probably better, helpful information to share with these business owners when they weren't prepped to sell. But these factors were something I used back then before I even knew about Value Builder. And I think even before John Warlow wrote the book, Built to Sell. So it's important, it's something that if you have your business set up properly, you're not going to have high scores in every factor, but you should at least have average scores in these top drivers that we're talking about if you want to get a premium price and have choices of who you're going to sell to.
Right. I think like the most common misconception that we hear oftentimes, that I hear in the dames and that you probably hear every day, all day long, especially when you're going to trade conferences, et cetera, is that people think, oh, I just need to get a business valuation. That's going to determine how much I'm going to get for my business. And they don't really know what that even means. First of all, it's sort of like this nebulous thing.
Yeah.
And they don't understand that there's so much more that actually goes into determining that value. And so I think we just did the Dame's Next Level Skills training this morning, which is in our video library. And we went deeply into, we did the good brush stroke of all of the value drivers.
Yes.
So let's give the brush stroke of what those are really quickly. And then we'll dive into really concentrating on the business owners being able to maximize their value through the 4 that we're going to discuss today. How about that?
You bet. Absolutely. So, first and foremost, the most important driver, I think, in the lower market, which when I say that, what I mean is there's a middle market, which just depends on who you're talking to. But in my world, it really is kind of silly. It's like funny little story. When I first came into business brokerage, right? And I never called myself a business broker before. I've always been a CFO. That's what I call myself. And the first time I introduced myself to someone as owning a business brokerage company, they went, "Oh." And then the next one I introduced, and they kind of did the same thing. And finally, you know me, I'm forward. And so I finally said, I got to know what's going on with the, and
like,
they
said, I'm not a lawyer. Okay.
I never experienced this. And they said, well, to be quite frank, you know, I've had really bad experiences working with business brokers. And that is a stereotype in that industry, because a lot of times business brokers treat working with that customer as a transaction, and they don't, they're not regulated. There's a lot of things around it. So I quickly learned, there is a big difference in the middle market, which is usually about 50 million plus, because you're regulated by FINRA. You normally have businesses that have a full executive team. They've been there, done the stuff we're talking about. Where anything below that, you know, this is the business owner's probably first time of selling their business.
Yeah.
And there's not a lot of regulation around it. So anyway, I just had to go there. I don't mean to remiss, but it's important to bring that up, because, you know, when I say lower market, there's a reason I'm saying that. There is a big difference when you're in middle market, how things are done. So
right. And it's always funny when people use certain words or terms to describe things, right? Because they'll say, oh, small business. Okay, well, tell me the size. You know, around 500 employees. Well, yeah, okay, according to the SBA, under 500 employees is a small business, but most of us small business owners would never say that we are in the same category with a 500 person company.
Yeah. So I'm talking to, I think that's something that's really important when we're talking about these driving factors. They can be applied to every business. And when you look at businesses that have scaled and are successful, I assure you that they're scoring high in these factors that we're talking, these drivers that we're talking about. But big difference how you get there, big difference on, you know, how you're going to achieve that success when you're below $10 million. And that's what we're talking about today. So awesome. The first thing I think is really important is hub and spoke, and that's the owner dependency. And every business starts that way, almost every, right? I know I did. I wore every hat: receptionist, administration, sales, the service provider. So yeah.
You suck. No, you suck.
Yeah, been there too. I'm glad I'm not alone. The next driver is Switzerland structure. That is dependency on too much dependency on a customer concentration, a supplier or a vendor, or even employees, key employees. Financial performance, which is so important. You know,
we're going to talk about that one today.
Yes, ma'am. So important that you understand your financials and your numbers. Growth potential. Can you expand your products and services into other markets, channels? You know, how can you get there? Valuation teeter-totter. That talks about, you know, as your business grows, it takes more money to run it. And so that's where free cash flow comes into play. Because if you're not able to cover your operating expenses, your business is not as valuable to a buyer. Recurring revenue, you know, I talk about, there's many businesses that say, well, I don't know how I would do that. There's a way to do it. Trust me. And I gave a quick example of the flower guys, just thinking out of the box around creating a monthly invoice that they bill every month to be able to help their business thrive, but provide a great service to those customers.
Highly worth working with one of the Raincatcher coaches to figure that out if you don't have a clue, right?
That's right. That's right.
And that's, of course, the last and most important is customer satisfaction.
And monopoly control too.
Oh,
so
yes.
Yep. Monopoly control, which is that moat. And I've talked about that. I think the last interview.
We'll talk about it next time. Yeah.
Yeah. And then customer satisfaction. So important.
So beautiful. Let's dive in and really nail down. Do you want to start with monopoly control, or no, you want to start with growth potential? Let's start there.
Yeah. Okay. So growth potential, I think this is an area where oftentimes business owners think that they have determined how to grow. Like they've done their business plan. They've talked with their employees. They've talked with their customers, and they think they know, okay, well, this is what we need to do. We need to add this additional service offering, or add this additional value or additional product, and then that will increase our revenue, and bam, we're good. No, no, because what I've seen in my career is what happens oftentimes is that business owner hasn't thought about the expenses that are attributed to growing that business. And oftentimes just increasing the revenue doesn't fix the problem of growth. So
Yep.
you have expenses that are attributed to, payroll, adding additional software. Maybe you have to get a new licensing. Lots of stuff can contribute expense wise to adding revenue. So you need to think about that and plan it. So one of the things I teach business owners is when you are looking at your products and services, you want to first isolate the set of services that meet what is called trifecta of scale. And there's 3, I call them factors, maybe they're attributes that contribute to being able to grow products and services successfully. That is, they must be teachable, they must be valuable, and they must be repeatable. And there's actually an exercise that you can do with one of our coaches, or, I'm happy to provide that information to any business owner that reaches out to us. But if you go through the coaching program, there's a module that is dedicated to growth potential. And not only does it help you evaluate trifecta of scale, it also will help you look at the expenses that, are needed. And another cool thing is it also will look at all your products and services and see if there's an opportunity to bundle them. Sometimes bundling services is the way to be able to grow.
Definitely. Love that. So and then I'm curious, because we're going to talk about recurring revenue, but what's the difference between repeatable and recurring?
Repeatable is where you can train, you're able to write down the process in a way that it can be repeatable over and over again by your current employees. So if you can't train someone how to be able to repeat selling the products and services, well, it's not very scalable, is it?
Yeah. And this is very synonymous with, this trifecta is synonymous with being able to scale. What I saw all the time as a marketing coach was I'd go into a business and see all of the different variations that people had of their services. And what that created was a mass confusion when you're a marketer and you're trying to help them sell their, market and sell their products and services. But also B, that means that in order to make that repeatable or teachable, you're going to have to create systems and processes for every single one of those variations and all of the little, little tracks that go off of them. So it's the first thing that I used to do with clients was we've got to get rid of all this stuff that is not providing profit and that it isn't repeatable and that is not going to go anywhere.
Yes, exactly. That's exactly it. And, and sometimes that can seem overwhelming. So that was where you help that owner to look at it through a different lens, to look at it differently. And that's okay, right? I think that's where a coach shows their most value is the way they're able to think out of the box and help come up with new ideas.
Well, and as business owners, and this is where I love where you guys come in, we are so focused on the day to day and on, the big Ferris wheel that just keeps going every single day that has to keep moving, that it's difficult to step outside of that and just look at all of these things that we don't normally have a chance to look at. So if we're
Yes.
going to work on our business, to me, it's, if you're planning on selling your business within the next 5 years or even 10 years, why wouldn't you be looking at all of these factors and then just building your plan accordingly? Because it's going to take time to fix some of these. These aren't
Yes.
just overnight.
Oh my gosh, you've nailed it on the head. And I hope that as we continue to talk to the dames and talk to small business owners who are watching this, they hear that, Megan, because that's exactly it. Listen, one of the reasons why I love what I do is because I get to meet incredible people that have built businesses that you're like, what? How did they come up with this idea?
Right.
But my other passion is to teach business owners, whether you're wanting to sell or keep your business, this is the stuff you need to do in order to build a valuable business. This is it. And if you want to hand it down to your kids or sell, doing an ESOP, great. We're not going to sell everybody to a third party, but
Mhm.
listen to this because this applies to you. It will help you.
Absolutely. So
Yeah.
the one that when we did our LinkedIn live a couple of weeks ago, months,
Yeah.
whatever the time frame is, who knows? I loved this one most because monopoly control,
Yeah.
because it really made sense to me to build this moat around the
Yep.
business. And the wider the moat, you said, the more helpful it's going to be in selling your business. So
That's right.
talk about that monopoly control. What is it?
Yeah. So the monopoly control is creating a competitive advantage, making your business protected from outside competitors or new, entrants coming into your industry, being able to just take over your business overnight. And it happens that I'm sure everyone has either read a story, experienced that. I experienced that. I had a pet shop, or a pet sitting company. And I was so proud of myself, right? I called it Who Let the Dogs Out. And we had this awesome setup and we had these great pet sitters. And guess what? I didn't have anything that had a monopoly control, a moat around it. And another competitor who had been in the industry for a while, all she did is sign up for our services, saw how we do things differently and copied it.
Right.
So, not great ideas, but that's where, looking at how it's really a differentiator. How can you make your business unique? So one example I'll just give quickly in Raincatcher, right? Business brokers are a dime a dozen. And I tell my brokers all the time, if you think sitting down with a referral partner, they're impressed because you're a business broker, think again. What they're impressed about is our core values, how we treat our customers, the fact that we always put their interests before our own, the assessment we use to have a discussion around their business, to give them options, to be able to build value prior to selling. That's our differentiator. And sure, can a competitor copy that? Of course they can. They don't have the people, they don't have the systems, and they don't have the heart that Raincatcher has. That's our differentiator. So there's lots of ways to build that value.
Awesome. Speaking of that free confidential valuation, we're going to make sure to have that link.
Yes, ma'am.
When we share, so that people can go to raincatcher.com/free confidential valuation.
Confidential is the key.
That's right. All right. So let's go to financial performance.
Yeah. So, this is an area where I could really go down rabbit holes. And so I promise to not get too geeked out here. I call it accountantese, as an accountant, because
it is your background.
Well, I understand the importance of it, Megan, and I know you do too, because you talk about this in the different peer groups at the Danes as the importance of understanding your numbers. If you are someone that is afraid of numbers, and don't be embarrassed, many people are. I get it. It's okay. There are a lot of people out there who love the numbers. So find that person, find a bookkeeper, find an accountant. It may or may not be your CPA. And let me explain, okay? And CPAs don't hate me. I love you. That some CPAs do not create their practice around educating owners on their financials. They'll tell them, here's how you're performing, and they do an excellent job with tax savings and filing taxes, but it's just not what they do. Some CPAs are excellent at that. And so one thing I'll say to the business owners, to the dames, is if you are not understanding what your accountant, your bookkeeper, your CPA is explaining to you, that's on them. And please raise your hand and tell them, I don't understand and I want to understand. Because the thing is that as an accountant, I can say something 10 different ways. And it's not because you're not getting it, you can't comprehend it. I just haven't said it the way that you understand.
Right.
So find somebody that's willing to explain that to you, and don't be embarrassed to say, I don't understand. Don't sit there and go, which a lot of business owners do, and walk away and go, I have no idea what that person just said. Understand your numbers.
I mean, think about the level of education that every CPA has before they go into their business, and then how much more they have based on how long they've been in business. And you're trying to cram that into a little period of time. I think it's, this is one of those, don't eat the elephant in one bite. You got to start slowly, little bit by little bit, every year, every month, understanding more and more about your financials, so that you become more and more understanding of anything that's thrown your way. It's not easy.
The story is what is most important. The story that those financials are telling you is what is going to make a difference between you being successful and not being successful. I'm telling you, and you are the only one as the business owner that knows your business inside and out, like your kid, right? And so you need to be able to go, I never understood that I'm paying 25% on, this expense line item, or that my payroll is 50% of what I'm bringing in, because you're the idea person. So it's important.
Yes. All right. So in the last few minutes, let's talk about recurring revenue. This is probably one of my favorite, as someone who had a business that had zero recurring revenue and now has full recurring revenue. It is so important, and something that is often overlooked and not taken as seriously as it should be.
Yeah, I'm really glad you said that, because I do feel like there are a lot of business owners that don't understand how important having free cash flow. And when I say that, it is life-changing. Okay. What it means is, it's the difference between not being able to pay yourself. It's the difference between not being able to bring in new staff. It's the difference between being worried, can I keep my lights on tomorrow? Can I pay my rent? You need to create your business. You need to model your business around where you're at in that current phase of your business. So let me say it a different way. Sometimes people end up adding expenses and then catching up with revenue. Do that differently. Start with revenue, figure out what expenses you're able to afford, and then make sure that at the end you have leftover cash. One way to be able to do that is through the recurring revenue model. There are so many ways that you can create recurring revenue. You can automatically bill your customers. If you're a marketing company and you know that you're going to be providing a certain service to them every month, then set it up where it's automatically drafted from their account. You're not chasing after them, and make sure that your contracts are set up so that you have at least 6 months, 12 months, whatever that is, guaranteed revenue coming in. That's a big difference between month to month. Oh my gosh, am I going to be able to make my expenses and grow my company versus I know I can because I know I have this contract in place and I know I have this revenue coming in.
And make sure that those contracts have a cancellation clause in there for dealing with those unforeseen circumstances that may come up. That's one that I saw frequently happen, didn't happen.
Yeah. I mean, I think during COVID, that was a different situation. You know, there were a lot of vendors that ended up having to renegotiate their contracts because overnight the world changed, you know. So kudos to those that worked with small business owners. And I know I had several that will forever have my business because of the way that they dealt with me during that time.
Especially the bankers.
Yeah. So one thing I wanted to share, and I'm going to share this with the full audience. If you're not sure how to create recurring revenue, there is a book that was written again by John Warlow called The Automatic Customer. So The Automatic Customer. And he goes through step by step 9 recurring models that he guarantees will cover any industry. Megan, I've yet worked with a business owner that I couldn't come up with a plan for recurring revenue.
Beautiful. I love it. It's wonderful. So it's funny, as you were talking about that reoccurring, however you want to say it. I think both, tomato. And then you were talking about,
so I have trouble pronouncing sometimes, just putting that out there.
I love it. I'm going to start saying that. You know, you said something that was really profound that I want everyone to hear. It kind of ties in with budgeting, right? We look at budgeting and we say budgeting is, gosh, it's such a pain. And we look at, okay, well, here are my expenses. Now I have to make this much revenue in order to cover those expenses. That's the early stages of business. And then we start looking at it in a different light and we say, here's my recurring revenue. Now, based on my strategy for growth, here's where I need to start spending the money in order to achieve those growth goals according to the budget that I've set. But the budget becomes much more driven to help you grow and scale the company. Would you say that in a different way than what I just said it? But it just hit me while you were talking.
Yeah. So I think one of them, so I'm going to take it back to cash flow. You have to, so first off, you have to create a budget in order to know where you're headed. And everyone should create a budget, and please do not just put it in your file cabinet. Put it to work. You can enter it into QuickBooks. There's a software called Live Plan that does a great job, but compare how you thought you were going to perform to your business plan, to your budget. The other thing you need to do is you need to be looking at your cash real time. Every business has a different way that they should manage that. Some should be daily, some should be weekly, some can be monthly. It really depends on how the revenue comes in and how often you're paying out expenses. But you need to have.
Go ahead. Saying look at it as cash-based accounting versus accrual-based accounting?
Yes. However, even with cash-based accounting, the problem there is you're not looking at your accounts receivable and your accounts payable. That's not being taken into account. The accrual method does that, but what the accrual method does is it ignores when you actually paid that bill. Very few small business owners are going to follow GAAP accounting, right? GAAP accounting, you know, you're allocating your insurance month after month. You're matching your expenses with your revenue. Well, who has time to do that in a business under 5 million? I don't. But having a cash flow plan in place, you incorporate your budget with, you know, so you've got it planned out. Here's my budget. This is what I think is going to happen. And then you're updating daily, weekly, monthly, what actually took place. The reason you want to do that is it helps you to proactively look at your cash flow. What if somebody didn't pay you when you thought they were going to? And you've got your annual premium insurance due the end of the month. Well, if you know that and you know somebody hasn't paid you and you've got that bill, well, then maybe you have to reorganize some expenses. Maybe you're calling some vendors going, listen, I need to pay you next month. And, I hope that's okay. Or maybe you go out and you find new revenue that you hadn't planned on because you know you've got this expense. It's all about being proactive and using your budget and your cash flow management plan hand in hand, along with looking at your financials on how you're doing.
I'm just saying, everyone should just start using profit first. It makes all of this so much easier in my brain.
Oh,
Like,
and we
I'm like, no,
have
just pull it from your operating savings account. Come on.
seriously, and we have the best profit first certified coach on our team, Susan
Certainly
Frew. Everybody knows Susan, and she will tell you the story about her plumbing business and how profit first saved her.
Yeah. I mean, it's honestly, for the, what do you call them? The smaller businesses, but the under
Lower, yeah,
lower
market, yeah.
lower market businesses.
Mm-hmm.
We don't need to have it be so complicated. We can simplify things, and we can look at it from that standpoint of, all right, if you put money in certain buckets and if you understand where things need to be allocated, that kind of becomes your budget. Well, it works hand in hand with your budget. But I love what you're saying about budget
And pay
variance.
yourself, pay yourself first.
I'm someone who's done that all the way along. So
yeah,
it's really smart. And it really does keep your morale up in a very different way when you're making sure that you're taking care of yourself first and your team.
That's right.
It really does. Awesome. Well, we have just had such great information today. We're excited to have shared it with you. And I just want you ladies and everybody else watching to know that your journey starts with understanding your company's value. So make sure that you click the link below this video where we have the link for Raincatcher's free confidential evaluation report so that you can go ahead and know where you need to be tomorrow. Make sure that you use that, and then join us again next month where we're going to focus on the other 4 value drivers, which are Switzerland. I can't say that today. Switzerland structure. Now my tongue is lazy. Switzerland structure, valuation teeter-totter, customer satisfaction, and hub and spoke. So we're going to go deep dive into all of those in the month of November. Marla, anything to say at the last minute here?
I so appreciate, Megan, you doing this because it means so much to me. I know it works, everyone. And, if you're not sure where to start, just give us a call. We'll help you figure it out. So
Yep.
Thanks, Dames.